Well, hello there. I'm Gemini. That battery can last up to 24 hours even with the always-on display turned on. It's pretty cool.
All right, welcome. Today, we're going to tackle a topic that, let's be honest, is a massive headache for pretty much anyone in the construction business: contractor tax compliance. But we're not just here to talk about how to survive tax season. No, we're going to explore how you can totally transform your approach, moving from that panicked paperwork pile to a state of proactive control, and yeah, even profit. So, let's get into it.
So, does this feel a little too familiar? That frantic end-of-the-year scramble? You're chasing down numbers, digging through a mountain of invoices. It is such a common pain point for contractors. I mean, you're trying to run a business, manage crews, get jobs done, and suddenly you're buried under this avalanche of compliance tasks. What if there was a better way?
Okay, before we get into all the cool strategies, we have to start with the fundamentals. I'm talking about the non-negotiables, the mandatory reporting duties that every single business in the construction industry has to deal with. Think of this as the foundation. You got to get this right before you can build anything on top of it.
And right at the heart of that foundation is one key document, the T5018. You can just think of it as the government's way of keeping tabs on where the money is going for services inside the construction world. If you're paying subcontractors, this form is your responsibility. It's not a suggestion, it's not optional, it is a mandatory part of doing business.
So what's the magic number that triggers this whole thing? It's $500. That's it. That is the threshold. If you pay any one subcontractor more than $500 for their services over your entire business year, you are legally required to report it. And that's a surprisingly low number, right? Which really means you have to be tracking your payments meticulously, right from day one.
All right, so here's the process, and you really have to nail every step. First, you need clean, accurate records: the sub's name, their business number or SIN, and the grand total you paid them. Simple enough. Then, you file the main form with the government. Step 3, you send a copy, a slip, to each of those subcontractors. And finally, and this one is absolutely crucial, you've got a deadline: 6 months after your business's fiscal year end. If you miss that, you could be looking at penalties.
Okay, so that covers what you have to do, the bare minimum. Now, let's get to the exciting part: how you can do it better. This is where we make the big shift. We're going to move away from being reactive, scrambling to meet deadlines, and get proactive, putting you firmly in the driver's seat all year long.
This slide just frames it perfectly, doesn't it? The two mindsets. I mean, look at the reactive contractor on the left. That's a world of stress, of always playing catch-up, and just dreading tax season like it's a root canal. But then, you look at the proactive contractor on the right. They use year-round planning to get control. For them, tax isn't a burden. It's a strategic business tool that can actually help them grow. That is where we want to be.
So how do you actually become that proactive contractor? Well, it's not some big secret. It just starts with having the right toolkit. And the foundation of that whole kit is constant communication with your tax advisor. Seriously, they need to be your strategic partner in this. But the two powerful, practical tools we're going to focus on today are the Tax Compliance Action Planner for handling the day-to-day, and the 5-year Business Profile Overview, which is all about charting your long-term success.
Let's get really practical and break down that first tool, the Tax Compliance Action Planner. This thing is basically your roadmap for the whole year. It takes all those deadlines and tasks that are just floating around in your head and puts them into a clear, week-by-week schedule so nothing ever falls through the cracks.
So let's just look at a quick sample for the first couple of months. Week 1 of January, you're on top of RSP contributions and TD1s. By week 3, it's payroll time. End of the month, you're remitting your deductions. Then February rolls around and bam, you're already getting your T-slips ready. You see how this breaks it all down? Instead of one giant, terrifying tax season, compliance just becomes a series of predictable, totally manageable weekly tasks.
Okay, so you saw that phrase on the planner, remit source deductions. What in the world does that actually mean? Well, it's pretty simple. It's just the money you've held back from your employees' paychecks for things like income tax, CPP, and EI. The crucial thing to remember is it's not your money. You're just holding it in trust for the government. Remitting is just the act of sending that money where it needs to go on time. It's a critical task you can't miss.
As we keep moving, March is all about mailing out T3 slips and handling deductions. And then, here it comes, April. For a lot of people, this is the most stressful month of the year. But look at the final task here. File tax return if you owe money. That little word "if" is everything. Because you've been proactive all quarter, there should be no surprises. Filing just becomes the final, calm step in a well-managed process, not some frantic, last-minute dash to the deadline.
And this is so important. The calendar we just glanced at, that's just a template. It's a starting point. Your business is unique. You've got different reporting periods, maybe different types of payments. This is exactly why that constant communication with your tax advisor is a non-negotiable. They're the ones who will help you customize this planner so it fits your business like a glove.
So, that planner helps you master your year. But what about your future? Where are you headed in 2 years, 5 years? This is where that second tool, the 5-year business profile overview, comes into play. It's all about lifting your head up from the weekly to-do list and actually looking at the big picture. So what is it? Well, it's a strategic document. It maps out your key financial numbers, your income, expenses, profits, cash flow, all over a 5-year stretch. It's not just a report card looking at the past. It's kind of like a crystal ball that helps you actually see where your business is heading by showing you the real trends and patterns over time. So why does this matter so much? Because this is the tool that moves you beyond just filing taxes and into true strategic financial planning. It helps you actually see your growth patterns, figure out the best time to make big investments, and here's the really powerful part. It helps you work with your accountant to legally average your taxes down over that 5-year period. You're not just reacting to 1 year anymore, you are playing the long game.
And this quote from the source material just sums it all up perfectly. Let's be really clear here. This has nothing to do with tax evasion or doing anything sketchy. This is about tax efficiency. You have a legal right to structure your business in a way that minimizes your tax burden. And that, right there, is the ultimate goal of all this proactive planning.
Okay, let's bring this all together. We started with that feeling of drowning in paperwork, the stress of just trying to stay compliant. But by shifting our mindset from reactive to proactive, and by using the right tools, we can transform that chore into a system of control that actually benefits your bottom line.
So here's your path forward. This is your action plan. First, master the fundamentals. Always report those subpayments over $500 using the T5018. Second, get tactical. Put a customized, year-round action planner into practice. Third, get strategic. Use that 5-year overview to guide your big picture decisions. And the final piece, the glue that holds it all together, keep that communication line with your tax advisor wide open.
So I'll just leave you with this one question. I want you to take a hard, honest look at your current process. Is it just a reactive scramble to stay compliant? Is it just about getting by? Or is it a proactive strategy that's actually helping you build a stronger, more profitable business? The choice and the opportunity is all yours.